and welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a brand new week and lots of cues to watch out for in trade today. Of course, given the fact that the SGX Nifty has migrated to GIFT Nifty, we'll be talking about that as well. We'll be talking about stocks like HDFC Bank, Reliance Industries and a whole host of auto stocks as well. And of course, if you have any stock-related queries, send them in to us on our live feed and we will have them addressed by your technical expert on the show. But before we do all that, let's take a look at the top headlines at this hour. Wall Street surges on Friday to finish off first half of the year in style. Tech-heavy Nasdaq posts its best half-yearly gains in 4 decades. Meanwhile, Asian markets open mixed with the Nikkei up over 1%. The SGX Nifty, which has transitioned to GIFT Nifty index from today, is reflecting a higher start for the Indian market. The SGX Nifty, as I mentioned, transitions to GIFT Nifty from today. All the derivative contracts worth $7.5 billion earlier traded in Singapore will shift to India. GIFT Nifty derivative contracts will be available for almost 21 hours, longer than when the SGX Nifty contracts were available on the Singapore exchange. The mega banking merger is finally complete as HDFC folds into HDFC Bank from the 1st of July. The merged financial behemoth now commands a market cap bigger than Morgan Stanley and ranks 4th in terms of global equity market capitalization. Maruti's compact car sales and Hero Motors June deliveries miss estimates with stress seen in the rural segment while exports also slump. Tata Motors delivers its best ever quarter of EV sales, although commercial vehicle sales remain subdued. Aisha's Royal Enfield sales comfortably beat street estimates. Among other stocks in the spotlight today are Reliance Industries, Bank of Baroda and Granules India. And senior Nationalist Congress Party leader Ajit Pawar takes oath as the second Deputy Chief Minister of Maharashtra. Reports suggest he has the backing of 40 MLAs and 8 members of the Legislative Council. NCP Chief Sharad Pawar denies support to the rebels and says he remains the face of the NCP. Well, let's get on board the first expert on our show today. Joining us is Deven Choksey, who's the founder and promoter of KRChoksey Holdings. Good morning, Deven. Good to have you on the show. Markets are at an all-time high. Would you expect any kind of meaningful correction to kick in from here, or do you think we are headed higher from here?
Good morning, Nandita. Well, I think on one side, the market is expecting corrections, and corrections of how much degree, I think one is not very clear. Because on the other side, the strong fundamentals continue in the economy. Economy is counting on several positives. On one side, the growth is a positive, tax collection is a positive, new money flowing into the corporate sector is very positive, government spending money on infrastructure is positive. So if you count, I think the list of positives, I think we are quite many. And as a result of which the market is basically in no mood to give up on this particular positive winds which are flowing from now Western world. So to a greater extent, I would think that I think even if the correction comes, the correction would be a smaller degree correction. And maybe I think that correction would be price correction to a certain extent, which will give an opportunity to buy at low levels. Another important trend which has been emerging now, that in the month of April, May and partly in June, the mid-caps probably draw the entire markets and the valuations of mid-cap I think reach to newer heights. People have made money, they are now booking profits in mid-cap. And in those 2-3 months, I think the large caps were largely neglected. Some of the larger companies were largely neglected, likes of Reliance, likes of HDFC Bank. Now you are basically seeing the possibility of money flowing into larger companies, because I think the funds are coming in a big portfolios. And at the same time, I think the larger companies would allow them to absorb this kind of a big flow of money. So to a greater extent, my belief is that I think in this coming 2-3 months, you should be seeing a larger participation of bigger players, ETF players as you may want to call them as, and they would be parking money into some of the large cap companies. So index is going up because of the sheer weightage of large cap companies is given. And that is where I would think that I think you would see the rally continuing and I think market index reaching to newer heights.
All right, you spoke about large caps like HDFC Bank. Now that the merger is complete, HDFC Bank per se has been underperforming the Nifty of the last 3 years or thereabouts, despite the fact that, it had clocked in a strong growth. But going forward, now that the merger is complete, do you think that scenario will reverse and, HDFC Bank will emerge as among the, top performers in the second half of the year?
It should be, and few rationals I think which would possibly make it happen. One of them would be the fourth largest bank in the world. I think this is where probably I think the compelling proposition is arising. Because if the global players are looking at earlier either the standalone HDFC or the standalone HDFC Bank, probably I think they were not putting in as much money as they would now put in because of the larger unit I think which is now emerging on the surface. So as a result of which, I think the money will flow into this. Second most important factor, I think with the 20% kind of a credit growth continuing for some of the corporate banks, including for HDFC Bank, be it from the corporate sector, be it from retail sector, be it from the housing finance business, or for that matter, priority sector. I think the 20% kind of a growth is continuing for the lender. And that is where I believe that in 3.5, 4 years' time, you develop the visibility of doubling the size of the balance sheet. The combined balance sheet at the end of FY24 for HDFC Bank combined, the AUM would be somewhere around 23, 24 lakh crores. And I think if this is compounded at the rate of 20%, then possibly in next 4 years' time, the size of the balance sheet will be in the vicinity of 45, 50 lakh crores. So in that kind of a situation, there would be a compelling proposition for most of the global investors to buy into the HDFC Bank. So current rally is basically, I think, a beginner as I believe it, because I think in last few years HDFC Bank has not participated. It is all the more reason for HDFC Bank to participate now in the current rally as far as I think the outlook goes in near future.
Devin, I also want to get in your thoughts on Reliance Industries. Of course, in your first answer, you had mentioned about, Reliance as well. But now, of course, it is the stock of the day, given the fact that it, along with BP, it has commenced production from MJ Field in the KG-D6 basin as well. But if you look at Reliance Industries on a YTD basis, it has underperformed the Nifty. Do you think in the second half, Reliance Industries will make a comeback and, emerge as one of the leaders of the market rally?
Again, Nandita, the answer lies in the same point, I think, which we discussed a little earlier, that in last 3 months, the large cap stocks haven't participated in Reliance included in that. For a variety of reasons, nothing to do with fundamentals. Fundamentals of Reliance have remained absolutely strong and convincing. Be it geo business, where the 20% rate of growth is continuing, be it retail business, where 15% kind of a compounded growth is continuing, oil and gas business and refining and petrochemical business. Again, I think the growth is continuing at a steady pace. So from all along, if I look at it, I think Reliance could have invited participation much earlier, which it did not. For reasons, I think, which is best known to us, that the larger funds, ETFs, they did not bring enough amount of money as much as they're bringing now in last week or 10 days. So from that point of view, in my reading, I think Reliance would be the participation. Reliance would participate rather in the market purely from the technical perspective. From the fundamental perspective, if you look at it, I think the company is only rolling out different business models. Geo financial services is being rolled out. We are seeing the 5G migration taking place in case of geo platforms, where I believe that I think the larger number of customers would be brought in, and at the same time, higher amount of average revenue per user would be also coming in. So all in all put together, I believe that I think for a company like Reliance, I think it makes a case to rally 20-25% from current levels.
All right, expected 20 to 25% rally on Reliance Industries from current levels. Very quickly, one last question to you, Deven. A lot of people will be left with a feeling of FOMO, given the fact that, markets are at record levels and they may have missed this leg of the rally. Any advice to those investors?
See, I would always say that I think India market offers you the visibility for next 10, 15 years now. And with that kind of visibility available to you, every dip or a fall is always a good and great buy opportunity. We have been shouting from the rooftop in February and month of March that this particular fall in the market is technical in nature and nothing to do with fundamentals of the companies. And we proved right that I think subsequent months market rallied. So my advice to investor here would be that I think since good quality stocks are available in the market, and we mentioned few of them and discussed a while back, I guess I think some of the large cap companies which are up till now neglected and they are available at a compelling proposition, they should be invested. If you can't invest all at a time, I think start investing gradually and every month you can put in some money through SIP kind of an approach in direct equity. So that would probably help you in building a portfolio. But investment is a must. I think you should not be timing the market. You should be timing your investment, I think, systematically for on a month-on-month basis, I believe.
All right, that's the advice to investors from Deven. Deven, thanks a lot for taking out time and joining in this morning. It was a pleasure chatting with you this morning.
Same here, Nandita. Thank you so much.
Well, on that note, let's bring on board our second guest for today, Rajesh Palvi of Axis Securities, joining in this morning. Good morning, Rajesh. Good to have you on the show. As per weekly options data, the maximum call open interest was at the 19,500 level, strike rather. 73.43 lakh contracts, were added. Which do you believe this can act as a crucial resistance for the market going forward, 19,500 or thereabouts?
Good morning, Nandita. So, looking at the data, yes, call concentration is at 19,500, but looking at the put writing activity, which clearly shows at higher level, is clearly shows that base is shifting higher, and confidence on the call writing is little low compared to the put writing part. It clearly shows that maybe some supply pressure could be there in at around 19,500, but as market breadth has improved significant and if we look at the overall sectorial participation, it clearly shows that this rally can extend further higher from 19,500 level also. So looking at the setup, one should keep their stop losses at around 19,050, 19,000 level. Till these levels are intact, this rally is going to continue further higher. Immediate target for this week, we are projecting around 19,450, 19,500. This could be the possible target for Nifty. Looking at the short covering in the previous session is clearly indicate that if we opens around 19,200 or if we sustain above those levels, then another round of short covering we can expect in the today's session also. So overall structure is bullish, and yes, maybe in this week we can extend this rally towards 19,500 again, where we have to review around those levels.
All right, before we delve into stocks, specific stocks, any F&O strategy for the day when it comes to our viewers?
So pharma is looking interesting, and we believe that most of the pharma stocks have done well in last couple of weeks. So Sun Pharma has given a breakout of its multiple supply zone on the daily as well as on the weekly chart. The weekly chart is clearly showing that the stock has given a breakout on the falling channel. So looking at the setup, we are bullish on Sun Pharma and we are projecting target of 1100. Keep stop loss of 1025. Another stock is from automobile space. Whole automobile stocks are doing well. From that space, we like Mahindra and Mahindra. Stock is almost enjoying its all-time high trajectory. The kind of long build-up was there in previous week. We still feel that M&M can continue further more upside. We are projecting target of 1500. Keep stop loss of 1420. And the third stock is from the mid-cap banking, that is RBL Bank. Most of the banking stocks are doing good, and RBL is managed to give breakout of its previous swing high of June. And looking at the data setup, we expect the RBL Bank to continue further more upside. 188, 192 is the immediate target. One can buy RBL Bank with stop loss of 175.
All right, so those were the stock picks to watch out for from Rajesh's table. Let's talk about some of the queries coming in on the auto sector. In fact, I saw a query on Aisha coming in. Given the fact that Inar had written in and wanted to know your thoughts on this stock. Enfield sales have been pretty good. It has seen an uptick of 26% on a year-on-year basis, and even VECV sales are pretty strong, 6.5% growth on a year-on-year basis. Would you expect some bit of an uptick coming in on Aisha Motors in today's session, and how should investors position themselves? Is this looking as one of the strongest stocks when it comes to the auto basket?
So, as I mentioned, that the whole auto basket, auto ancillary, all are looking very attractive, and the kind of traction we are seeing in the whole auto basket, we expect that Aisha Motor is also poised for giving a breakout on the near-term chart. If we analyze the daily setup, almost stock is consolidating since last 4-5 trading session in very narrow range, and stock is holding its support of 50-day moving average. So looking at the overall setup, we expect, yes, once the stock crosses about 3600, then this stock can show some upside momentum towards 3660 to 3680 from the current level. So one can buy this stock with stop loss of 3540, and we are projecting target of 3680 to 3700 in the short term.
All right. Hope that answers your query. Those are the levels to watch out for on Aisha Motors. Let's talk about Granules India, another stock in focus this morning. US FDA has completed inspection of Vizag unit. No observations for the unit, and that comes as a boost for the company. And in fact, this unit that the US FDA was inspecting manufactures active pharmaceutical ingredients. Given the fact that Granules is just coming off its 52-week lows, and even on Friday's session it was under a fair bit of pressure. Would you expect this news to have a positive rub-off effect on the stock? In fact, we also have a query coming in on this stock from Saurabh Gupta. Wants to know your thoughts on this stock. What are the levels you'll be watching out for on this one?
So after corrective move since last 4-5 months, stock is consolidating in narrow range, and stock is very well holding its support area of 275 to 80 zone, which is very important support area for Granules at this juncture. So if its stocks continues to hold about 280 level, then yes, there is a possibility that stock may try to give breakout about 310, which is immediate supply zone, which we are seeing on the near term short term setup. So immediate target is 310. Keep stop loss of 280. If its stock crosses about 310, then possibly this stock can show furthermore upside towards 340, 350 zone on the positional basis. So if you are a positional trader or investor, keep your stop loss at 280 for upside target of 340.
All right, that's the view on Granules. Hope that answers your query. Let's take up another query coming in on Balrampur Chini from Vipul Tiwari. Wants to know your views on this. Now, this stock has been in a downtrend, even though we have seen bouts of gains coming in the middle when there were fears, of course, surrounding El Nino, and that would of course weigh in on supply, and because of that we saw some bit of uptick coming in the middle. But if you look at the stock on a 5-day basis, it's down 5%, just coming off its 52-week lows. How would you play the sugar pack going forward? Would you look at a Shriram, Bajaj, Hindustan or anything like that, or would you advise investors to buy into a Balrampur Chini in this leg of downtrend?
So most of the sugar stocks are consolidating since last 3-4 weeks. But if we analyze the Balrampur Chini, it's still in downtrend, and stock is almost trading near to its 200-day moving average, which is almost at around 378, 375 zone. So looking at the overall, if we analyze other sugar stocks, they are showing some bit of recovery from recent low. So Balrampur Chini structure is still weak until the stock not crosses above 400, 405 level. Some bit of pressure we can see in the stock prices on any kind of pullback if we get in the near term basis. On the other hand, if it stocks breaks below 375, then we may see some more supply pressure in the stock prices, and then possibly stock can correct further lower towards 360, 365 zone on the downside. So at this moment, avoid this stock until the stock not crosses above 395, 405 level on a closing basis. We expect some corrective move to be there in the Balrampur Chini at this moment. So our advice would be avoid at this juncture.
All right, avoid Balrampur Chini at the current juncture. Hope that answers your query. We have a query coming in on LTI Mindtree from Nikhil Sahu. Now, of course, this is a possible entrant on the Nifty 50, after HDFC delists, right? Given the fact that the stock has done fairly well, I think up 20% on a YTD basis, how much of an upside would you expect on this counter, given the fact that, it is going to enter the big league and enter the, coveted Nifty 50 index, if at all?
Yeah, in the expectation of new Nifty entrant post this HDFC Bank, HDFC merger, a lot of buying action was there in the previous week, and a lot of long built-up was there in the data setup also. The stock managed to give breakout of its multiple supply zone on the near-term, short-term setup also. The kind of breakout which we have witnessed in the previous week, we expect that if the stock continues to hold above 5100 level, then possibly another target on the upside on the near-term basis is around 5250 to 5300 in the continuation of this uptrend. So 5300 is the near-term target for LTI Mindtree. One can hold the position with stop loss of 5140.
All right, stop loss of 5140. That is the level to watch out for. Rajesh, your views on Vedanta, given the fact that the stock is in news this morning, it has kicked off a review of its steel and raw material businesses for a potential stake sale, strategic stake sale rather. Vedanta, of course, has been in a downtrend, coming off 52-week lows over the last, say, 1 month or so. It has been extremely flat. And in the last 6 months, it has shed somewhere around 10 to 12% or thereabouts. More weakness on the charts for Vedanta going forward?
So since last 3-4 months, the stock is trading in very narrow range. After corrective move, stock is consolidating in very narrow range and holding the support area of 265, which is very important and crucial for the Vedanta at this juncture. If it stocks breaks below 265, then furthermore downside we can see on the short-term basis also, and then possibly stock may correct towards 250, 245 zone also. Looking at the near-term setup, we expect some consolidation is going to continue in the stock prices. On the higher side, 295, 300 is the key resistance area. So we believe that some consolidation in range of 265 to 295 is the range for some more time. Either side, breakout or breakdown will decide the further fresh direction for the stock price. But at this moment, if you want to buy, my advice would be avoid at this moment, because stock is going to remain in very narrow range for some more time.
All right, that's the view in Vedanta. Then I also want to get in, your thoughts on the brokerage call of the day. It's Apollo Tyres. Morgan Stanley has in fact downgraded the stock to equal weight, but target price has been raised to 425 rupees a share. I believe that the company is on track to meet its return on capital employed targets. In fact, commodity cycle and competitive intensity are rather benign for the company. In fact, Morgan Stanley also expects the company to post an EBITDA margin of 15.7% in FY24, and it believes that at the moment the risk reward is fairly balanced for Apollo Tyres. If you look at the stock over the last 1 month, it has gained 4% or thereabouts, but of late over the last 5 days, it has come under a bit of selling pressure. Would you expect this pressure to continue, or would you expect this stock to pick up going forward in the month of July?
So most of the auto ancillary are in bullish trend. Yes, some corrective action was there in Apollo Tyre in recent past, but looking at the overall setup, stock is holding above all its important long-term, short-term moving averages, and stock has taken the support from its upsloping trend line on the daily chart. So as we are holding this near-term setup support area, so 395, 396 is the key level to watch for. If it stocks breaks those levels, then some more profit taking can be there in the stock prices. But till stock is holding above 395, our view is on the bullish side. Once the stock crosses above 415, some more buying action we can see in the stock prices, and then possibly stock can move up towards 440 level. So at this moment, if you are holding your long position, then keep a stop loss of 395. Upside target is 415. On the crossover of 415, stock will resume its uptrend.
All right, that's a bullish view coming in on Apollo Tyres. Now, Rajesh, you've already shared your stock picks with us, but any, F&O strategy on the Nifty for today?
So as we are holding bullish view, and we expect that this upward momentum is going to continue further higher, and we are projecting target of 19,450. So to play this upward momentum, we are initiating here to buy 19,200 call option of current weekly expiry, which was closed at around 76 rupees. So we are projecting target of 110 to 120 on the higher side. Keep a stop loss of 55. So we are bullish, and we are initiating to buy 19,200 call option.
All right, 19,200 call option. Well, that is the view then. Well, with that, I think we've come to the end of this edition of Morning Trade. Rajesh, thanks a lot for taking out time, joining in this morning, and of course, answering all of your queries as well. Well, thanks a lot for watching. With that, we've come to the end of this edition of Morning Trade. From me and the entire team, thanks a lot for watching. But don't go anywhere, because coming up next is Opening Bell.